morning, StockTwits crew. Happy Friday, everybody. Hope y'all have had a great week so far. It's been a crazy week in the markets, crazy week in the world. Got my man Michael Nauss here. How are we feeling about this market right now, Michael Nauss? This has been a little interesting week for me. I don't know about you, but I've just been really kicking back. Haven't been doing as much personally, so I'm curious how you've been looking at things.
Oh, see, that's funny because I have gotten more phone calls from trading friends and trading friends I haven't talked to in a long time than any other week in the last couple of years, and it's both sides. It seems like you either made a killing this week or you just got absolutely slapped. So I've been like psychologist for a bunch of buddies on both sides of that, of saying, don't worry, it's okay, you'll make it back, or you're not a genius, calm down. Because we've seen these every day. It seems like you open up StockTwits and the number one name is up 5,000%. So some people are on the right side of it, some people are on the wrong side of it. But it's been if you're not in penny stock land, you're probably more, you didn't age as much this week as the people who trade that stuff, I think.
Oh yeah, I'm definitely not in that area, so I think I'm glad to be out of that area for this week. But
Yeah, exactly.
But yeah, we had stocks are climbing again. I mean, we've been looking at the markets. I know we've been going a little more sideways these past few weeks, but things are right back at highs, right? The consolidation has resulted in higher as it has over and over and over in the past, right? So not extremely surprised to see the market just continue what it's been doing. But I did get a little, not like really bearish, just more cautious when we started going sideways in this area for, I mean, since the end of July, we've been doing this, right? And so once we slow down like that a little bit and start forming some structure, it gives me an idea of, okay, like maybe we do get a little bit of pullback, which we saw a little bit of a volatility influx. But it just ends up getting bought up right again, right? Look at that chart right there on SPY. Every dip is just bought up. I know QQQ ended up dipping a bit more because tech has been weaker, but
yeah,
I mean, still look at, even with it's still beautiful, still holding up.
Right.
So.
And this is why I keep saying I'm going to pay FinViz so they get the ads out of here. I have to. But so this, again, we're always looking at the red line. So this is the positioning data. So I've been hammering the table on this for months, right? They've been very, very short the IWM and very, very long the NASDAQ. And you see what happened this week. That's where they covered that long position. So they were kind of forced liquidated out of this because that trade hasn't been working, right? IWM has been outperforming. So being long one and short the other wasn't the move. And yeah, so the now positioning is back to neutral, which to me is the most bullish thing that could possibly happen, is that everybody who was long got liquidated. So they're going to have to buy back in if things move higher. So that's why you've had that more dramatic kind of sell off, is because there was that kind of force liquidated, that force unwind. And then on the Russell, a little bit of short covering, but they're still net short 70,000 contracts across the Russell. So I wouldn't want to be betting with these guys at all. But yeah, that trade is no longer I was flashing red lights, emergencies, this is going to end poorly. And I bet you did. I bet you're going to hear of some funds that blew up, but the positioning is less interesting to me now, just because it's like sentiment. You only care when it's at the extremes. You don't care when it's kind of in the middle like that.
Yeah, that makes sense. Definitely. We had some, excuse me, we had some data come out this week. Inflation data showed prices still rising and mortgage rates hitting an 11-month low, helping stocks grind higher. Initial jobless claims ticked up to the highest in nearly 4 years, while markets still expect rate cuts next week, even if it's smaller than they might have been with cooler prices. Today is solemn remembrance of Wall Street, which is yesterday, of course. So, hope everybody was remembering everything there, of course. But meme stocks, that ticker open, which has been on everybody's radar a little bit. I don't know if you've been watching that too much, Michael Nauss.
I have been. I sold half of my open. And I always not to brag, more. But if we talk about something, I just want to make sure that I told people I'm in it. Yeah, from $3, I sold half at 10 yesterday, and I see. I already have it out here. So this chart down here is a short float data. So I love not just the percentage of short float, but when you can chart the short float data, you can see where the shorts are. And it was only 10% short until it broke $1. to the downside. So most of these people are short between 50 cents and $1, which is just insane. And then you expected when it rallied to $5 that this short float would have ticked down, but it ticked up. So they shorted more into this move, which is just like, do you want to blow up your fund? That just seems to be the way to do it. And yeah, so that's really, I think, what's happening here is you've got this big short squeeze. So I took part off, and then my plan for the rest of the trade is I'm going to stay in until I see this like tick down under 20, until they're kind of forced to capitulate here. Kind of same thing that happened with GameStop, right? Is that it was very heavily shorted. You had some wicked moves out of it, and then the shorts got liquidated, and it's just been doing nothing ever since. So like all meme stocks, make sure you have a plan to exit and you don't join a cult and just make it your identity, because there's so many traders out there that are still AMC apes, even though it's down like 99.999%.
Literally could have bought any other stock almost in the market and been better off. Like it's crazy. I just don't understand. Like, yeah, people. The more I've traded and the longer I spend time in this industry, Michael Nauss, the more I realize that these hedge funds and like these institutions have no clue what they are doing at all. I mean, like you just explained, they're shorting more into something like this. Like literally, do you want to blow up your fund? It doesn't make sense to me. I mean, well, I'm an average guy. I'm a young guy. I've been in this game for 5 years, and I already understand like these guys have no idea what they're doing consistently over and over. Right. And I don't get it. It makes no sense.
So this stock, and if you go back out, and I'll just zoom out to chart the short float. If you go out here, right, they weren't very short when the thing was $35. The short flow was only 4%. So you're not shorting it at 30. You're starting to nail into your short at 1. Like, what did you not learn? And the king of this is Carvana, right? Because GameStop had a flash in a pan, and then it crashed, and it's whatever. It's a broken retail company. But Carvana should have taught them, where that was shorted, and they did the same thing. When it hit like $1, everybody in the world started shorting it, and you had a whole bunch of hedge funds blow up. It just feels like this is the same thing. And this is why I spend so much time looking at positioning data, because like you mentioned, they're always wrong. So if you can just find where all of the institutions are and bet on the other side of that, generally speaking, because not only are they wrong, they're wrong and they're slow. So to get out of an open position, it's not just like us, like one guy's going to hit a button and get out, right? It's going to be, we're going to have a meeting, and that meeting's going to have 10 people in the room, and we're going to debate back and forth whether or not we cover our shorts. And then we're going to have to send that to a trader, and that's going to have to go to a compliance department, and then we're going to cover our open trade. And this is why whenever retail traders say, oh, the institutions are rigging the game against us, it's like, no, you've got, as someone who worked in the hedge fund space for 10 years, you have such an easier life. If you want to buy the stock, you buy it. If it's going against you, you hit another button, you get out. They can't do that. Like, we can.
It's so true, because as retail traders, we forget about that every day. And this is a big portion of my actual trading, right? Is trying to identify this happening to traders in real time. Right? Traders getting stopped out and getting screwed by like bigger money, whatever you want to call it. Right. But you're so right. That's exactly what's going on every single day. Right. We're able to come in and just click that button whenever we want, and we're in, we're out. But that's not how the market works. That's not how real big individuals are trading in the market. They can't. You have to have some sort of liquidity to fill those millions of dollars of orders, hundreds of thousands of dollars of orders. It don't just click a button and get filled. Right. And so how do you generate that? Right?
Everything has to be run by lawyers, right? Yep, their whole, it's not just, there's generally a hedge fund is structured with, you have the portfolio management team. So you've got 5 people who meet, and they say, we're going to buy this, we're going to short this, this is going up, this is going down. Then that has to get filtered through a compliance department to make sure that they're not going to get sued, and it's not outside of their prospectus or what they told investors they do. And then it ends up going down to the trader after that. So, and then they have to fill millions to tens of millions to hundreds of millions of shares, which you just can't do on a dime. But that whole train has to happen every time. So it's the same reason why we make fun of the magazine cover indicator, because as soon as they say, you see on the cover of The Economist what an awful market it is. You know you have to buy because it means it's been an awful market long enough to be thought about, written about, edited, right? Edited again, published, and then sent out. And it's just because they're all so big and they're all so late. So take advantage of your ability as a trader to change your mind 17 times a day if you have to, and only stick with the stuff that's working for you.
Yeah, that's so true. We forget that the things that we can actually do versus them, it's benefiting us, right? It's a good thing. So yeah, just on open real quick, and up 79.5% after Shopify. Who's this executive? Kaz Najation? I'm gonna say that Najation. I think that's right. Was named CEO. Former CEO Kerry Wheeler resigned last month amid pressure from retail investors, galvanized by Eric Jackson. Co-founders Keith Raboy and Eric Wu returned to the board. Founder DNA narrative feeling the surge. We had some earnings kickoff as well. Adobe was up 0.11%, beat on revenue, guided Q4 sales above the street. The CEO highlighted was this $5 billion AI influenced ARR and AI first ARR already passed the $250 million year end goal. So I guess that's good stuff for Adobe. I don't really follow Adobe much, to be completely honest, but when I look at the chart, we did just dip down to a big spot on the weekly, and we swept those lows that's April lows, actually. We're holding this area. I do find it difficult that we're at April lows, and the stock market is nowhere near those April lows, right? The SPY and QQQ. So obviously Adobe has had a tough time during, this year, but I don't hate it here. I mean, I think we got to be careful because again, it's so weak relative to the market, but I don't hate the price action here. We swept out these lows. We're trying to hold. I don't have any triggers for upside of any sort, but I'm not hating this area for potential upside. What do you think?
Yeah, and it's a basement window trade. My trading mentor always called it, is like, if you're going to jump out a window, might as well be the basement window. It's like, right where you're wrong. You buy it here and you put a set of stop at like 325 or something, and then you move on with your day. If you've got some sort of fundamental belief that Adobe would turn around, again, I'm not the fundamental guy, but it seems like photo generation and stuff is going to be eaten by AI so incredibly quickly. Same with like video editing and basically everything Adobe does. I think that's probably why it's got hammered so hard. Is I'm not the only one thinking that unless they, get off their butts when it comes to AI, they're probably done. But again, if you want to take a shot, at least you know where you're wrong. And then if it does, you're risking 10% to make, if it gets back to highs or something, 60 or 70%.
In terms of risk to reward, if you semi like the company, if you like the setup, I mean, like you said, you know where you're wrong. It's quick, it's low risk.
That's it. I think you can take any trade you want as long as you've got your out. I don't think it matters what trade you take, as long as you know exactly where you're wrong. Have at it.
Agreed. We also had Restoration Hardware down 0.35%, missed on EPS and revenue. CEO Gary Friedman warned higher tariffs will pressure smaller import-heavy rivals. So RH expects to consolidate share. Oh boy,
yeah,
that's a range. That's a range.
This is
guys. A reaction is because it's just gone nowhere, right? It's on the slow grind up. It's building structure, but where are we really going? And is there really any momentum? The answer is no, right? So
yeah, is this just the bear flag to end all bear flags? You have this huge push down, and then it just grinds up for ages, and now it's losing that, and it's losing this kind of channel upwards. Yeah, to me that just screams. If you were to take this chart and invert it, and you look at this, a lot of people would look at this and say, oh, I want to buy this name. This is what I was just on a Mac anyway. Option I on TradingView, you can invert the chart, and I always think that's an interesting thing to do. It's like, if you would buy this chart, which it does look great for a buy, then you should sell that chart, which is what's actually happening. Yeah, that looks like a bear flag to end all bear flags to me. I'm not interested there. So, uh-oh, did we lose Jordan? I think we lost Jordan for a second here. Yeah, I got it. So what we did, Adobe, Restoration Hardwares. What do we got? We got Paramount, Skydance, Warner Brothers, Discovery. Wow, that's PSKY.
Am I back? I
You're
think
back.
I'm back. Oh, let's go. I don't know why I just cut out, but I'm back.
All right. We were just on PSKY, which they gave up their para ticker. That was just such an easy.
I know, that sucks.
Yeah. Why would you do that? Okay, that's wrong. But it looks like there's some mergers going on in this space, and this is just technically, I was looking at it, and I've been kind of pounding the table on these setups. Right? Give me these low bases that are resolving higher. That has been, for me, my most profitable overall setup this year. It's just something that has been left for dead for a year, potentially two, and is now breaking out of that range. I'm trying to fill up a whole mid figure portfolio with just these names, and then not look at it for a year or so, and just kind of split it up within them. So this one looks great to me.
Yeah, and then we saw, I'm sure you already touched on it real quick, but Warner Bros. Just freaking killed it yesterday with that pop based off all this. So, yeah, good stuff.
WBT. I haven't looked at that one yet. Yeah, that's kind of the same thing.
Yeah, similar thing.
It's just something, call them zombie companies, call them whatever you want, but just things that have been priced as if they're not going to exist anymore, like 2 years ago. Because the way I look at it is you've weathered two bear markets. You did the 2021 to 23 and then the 2025 bear market. So you were able to deal with those and survive. Great. Now, if your company did not go under, which so many did, we just forget about them. But, there's Bird and Ride Motors, there was EV companies and Nikola and all these things. Like, just, you could probably list like 50 companies if you really sat and thought about it that went bankrupt during this period of time, and they were looking at things like Warner Brothers and saying, well, they're probably the same thing's going to happen. So if they don't, then you might have good little recovery plays here.
Yeah. We also just real quick, I know it's not on our sheet, but Baidu, same thing here. And that actually has been getting some nice pops recently, but same thing. I don't know how much I love Baidu, but just for the trade, I mean, it's kind of lining up with what you were saying. I know we've talked about it recently too, and just another big base at the bottom, trying to get that breakout.
Yeah, and the ones that I show for examples is like Robinhood. I remember all the talk here with Robinhood was, oh, someone will buy them. Like every podcast you listen to, every spaces you went to, whatever it was, oh, someone will buy Robinhood, don't worry. So they were pricing it as if it was near worthless to, right? Someone's going to buy them out for $10 a share. Now they're at 118 and they're making new highs. And you can say the same thing with Coinbase. Right, just spent years kind of in this area, and then this outlet that I own, just a bunch of these companies that de-SPAC'd and fell 90%, and now they're holding. Just if you find them, hit me up, give me a list, because I'm taking an account and I just dividing it into like 20, and I'm just going to buy 20 of these names, and then I'm going to lock that somewhere that I don't look at it for a couple of years, and I bet you 5 out of the 20 are going to just be hitting new highs again, which something like this would be like $150 a share, which would be ridiculous. But you get a couple, you don't need many Robinhoods to get to retirement.
No, you do not. Just a couple of those, just one of those. That's all I need. Some IPO news. Figure surged 40% on day one. Lender touts blockchain rails to cut HELOC times to 10 days from 42. I don't know. Yeah. That looks like she's it.
That's it.
I mean, y'all know how me and Michael feel about these IPOs, Short that shit.
Well, and easiest way, the way I look at it, there's your anchored view app from the high. Not interested in this name until it can retake that. And not only today, but like forever.
Yeah.
If you like this name, the easiest thing to do is just set an alert for this and say, wake me up when, and just
don't touch it until
leave it alone. Because to explain to people, right, this is just the average price of everybody buying this thing since it's ever existed. And you can even see, right, that was huge. We tried to bounce, hit that zone, and then just failed entirely. Until it can retake that, it means the average person in this thing lost money. And then you got to remember why a company IPOs. It's only two reasons: exit liquidity for the people who started the company, or they need another avenue to raise more money. Those are the only reasons that you want to IPO. So don't be that exit liquidity. Everyone just gets pumped because like Circle and some of these names, these are like unicorns that ripped off the open and then they kind of fell apart, right? They want like a Webull that just did this stupidity and then came all the way back down. Just, yeah, wake me up when we get over the anchored view up from that. Other than that, leave me alone.
Yeah, I'm with it. Yeah, they raised nearly $800 million in the IPO. Co-founder Mike Cagney leaned hard into Web3, pitching Figure as a future Mag 7 of Web3. So, I mean, that's how you get people excited right there, right? That's how you do it.
Mag 7 Web3, ship it. Just there's your taglines. I mean, throw some AI, throw some AI, blockchain, whatever buzzwords
you
can.
I mean, we've heard these earnings calls, right? They say that, and it's like, oh shit, things are going crazy, right? And
let's get
and then Apple still won't do it. Apple will use AI to present their whole presentation for everybody, but they won't talk about AI.
Well, and they had to rebrand it. Was the Apple Intelligence? That's what
I couldn't believe that. I'm sitting here. I'm like, you guys are you're using AI for this, but like, why are we not diving into AI? Maybe it's their play, right? It's their play. They're waiting. I don't know. I'm over Apple, bro. I'm over it. It's ridiculous.
What I think, and again, as someone who's about to drop, I actually have a cart filled out for like $8,000 of new watches and phones, and so like they get their money from me. They're just never going to call it AI. It's going to be they're going to just make Siri not dumb. At some point, you're going to wake up and
smart Siri.
Yeah, they just call it something different, and just so that they can do their fancy thing where everything's branded their own way, and just make it seamless. I don't think there'll ever be like a chat bot. It will all just kind of
because that's extra,
things that will help you,
right? And Apple's always seamless. Like, look at your AirPods, right? Like, you open them up and they're connected. Like, everything wants to be easy, and so I'm with you there. They likely make things super easy and already like built into your phones type of thing. So yeah, we'll see what they do. I don't know. I saw a tweet from our friend Greg the other day. It was like it was the photo of the guy wearing the whole VR headset, and it was like Apple released this 2 years ago and then didn't talk about it ever again. It's like, yeah, what are we doing, bro?
Exactly. Everyone's been saying, yeah, when's the next version coming out? Probably a year from now.
Yeah, we'll see. 10
years maybe.
Macro snap on the macro side of things. What we got? Prices up nearly 3% month over month. For this was the CPI yesterday, the core running 3.1% annualized for a second month. I don't know if you had any thoughts on any of the data that came out throughout this week, Michael. We had that CPI yesterday, PPI the day before. Not too much weight for me, but brings volatility, brings some movement.
I don't. It's all about the only thing that matters with these data points is whether or not it will get in the way of Fed cutting rates. That's the only thing we care about. I mean, unless something comes out so out of line that the Fed's like, okay, we can't cut anymore, then it's business as usual. And until I've been saying this for months, and I'll continue to say it until these shorts get really, really smoked and you start to see these red lines get back up to the neutral zone, we're going to continue to get higher, because they shorted the S&P 500 the whole way up. They were short and they still haven't covered. So until that happens, just like we saw with the NASDAQ, away we go. And it's all positioning. These guys are wrong pretty much every time, so I'm not going to take the bet that they're right this time.
Agreed. And yeah, just looking at the Fed Watch tool, it's a 92.5% chance right now. So
yeah, so this is the
big chance.
So TrendSpider here integrated with Polymarket.
So I like that. I've never seen that. That looks
so good. It's actually really cool. You can go and so you go to the SPY and then see what these changes in different betting markets have done. So just recently, actually 3 cuts or 75 basis points has taken the lead with people betting. And I like this a little bit better in the Fed Watch tool, just because this is people actually putting their money on the line. And it's crazy how like Kalshi and Polymarket, how accurate these things are. And yet people are betting either 2 or 3 is nearly 100% chance of 2 or 3 cuts, with 3 actually being the highest. And then down here you have 1, 4, and 5 with nearly 0% chance that there's going to be any of those. So it looks like somewhere between 2 and 3. Again, I have more faith in these betting markets than a lot of different markets out there.
Agreed. They just show me, they've shown me the consistency, right? And I'm gonna I'm gonna go where the facts are, and it seems like those betting markets tend to have some good sentiment. So not a bad idea to kind of follow those. We also had initial jobless claims at a near 4-year high. Market still pricing a cut next week, which we're talking about, but stickier inflation tempers size expectations. We have the Stocktoberfest coming up with StockTwits. One community member gets airfare, hotel, and a ticket. Post your pitch in the comments or submit a short video by September 18th, 12 p.m. Eastern, and the community vote picks the winner. So shout out to that, guys. Look more into that. Go on the StockTwits page, or maybe go to the StockTwits platform, of course, and look more into that if you guys are interested. That's super cool. So that'll be happening October 20th to the 22nd. So I know some of you guys in the audience might want to take advantage of that. Run that up. I would be. If I was in the audience right now, I'd be already on that page. So take advantage of that. We had some other notable pops and drops throughout the week. Celsius popped up on a Goldman buy, apparently, which I did not see. This is the first time I'm hearing of this. Again, guys, this just goes to show you don't need to know everything that's happening in the market throughout the week. I'm just looking at these charts 90% of the time. So I didn't even know that this is happening. But CLH has obviously been a great play this entire year. We're sitting back at 57.92. Jeez. Obviously, that's a good catalyst. That's good news. And we've been on a dip. So maybe we see some buying up from this area. I don't know. What are you thinking about this, Michael?
Generally, when these momentum plays break like this, I'm not going to be interested till it gets to highs. I think you might just have this sideways consolidation or sideways action. However, MNST, is it, for Monster Energy Drink? I don't know if you ever looked at this thing on like a monthly chart.
Oh, she's a monster, bro.
This is
the name works.
167,000% since 2004, just a straight line up. So right there is precedent of really good. But the way I look at it is, if you had waited, this kind of looks, this is a monthly chart now, so this kind of looks like the Celsius crack, and then you just waited for buy it through highs, you were still all right. Took you some time, but
there's got to be somebody that's just been holding this. They got everything they own in Monster. There's got to be somebody in the world that's just been riding this
probably
whole time.
Died by drinking too much Monster. if you were a Monster like deca millionaire because you drank Monster, you probably are having 4 or 5 a day and your heart exploded at some point.
Agreed. Yeah. Gosh, it's just so funny when you look at it. Like, that's the last stock you expect to be performing like that over this whole time. And it just goes to show, like, that's where sometimes we're on social media all day, right? And sometimes I'll hear or see some things on the timeline that's so outlandish and so ridiculous sounding that I'm just like, there's no way. But I'm learning to realize that there's always a way, no matter what the company might be. Look at freaking Monster, an energy drink company. And I know, like, yes, there's been like a lot of growth in that sector in the past years, you know what I mean? But it's just like, it's an energy drink company. It's the last company you expect to do this versus everything else we have. And look at it. It's insane.
We talk about it all the time, is the sexier the play, the more crowded it becomes. And then you have everyone doing it. When positioning gets too much, things get wacky. So, you want to hold something for 10 years, find like a boring guy who like makes rugs or something, right? And just what prints money doing it, and invest in that, because you're going to be alone. Not everyone's going to be in there.
Agreed. What's up, Lia? Good morning.
Good morning. How are you doing?
Doing good. We're just looking at this Monster Energy chart because it's just been the best stock, even though you would have never thought it.
Yeah.
How are things for you this week? What have you been playing?
I had a very good week. We were playing, of course, UNH. That's the biggest, I think, this week for me.
Sorry, what was that? You're a little low there for me.
Am I? You
Oh, that's
know?
better.
There you
That's
go. You're
I
better.
was
good.
just talking really quiet. I'm so tired. I'm sorry, guys.
No
You need a
worries.
Monster Energy. Here you
Yeah.
go.
I
All
do need a monster. I need Celsius and monsters, everything.
Right.
Monsters everywhere.
I'll pop the screen over to you there so you can
Yeah.
share what you've been up to.
Okay. Thank
Yeah,
you.
UNH has been a beautiful play, just continuing out of that little range.
Let me pick my charting software. Yeah, so we are in UNH for a while already. My average is 274. I had two entries and that gave me that average, so I'm pretty happy here. I think we're about to fill the gap to 373 most likely, and then probably chop around there to go higher. It's a defensive name, so no matter what happens, if we have like weak market, this one might go. And I'm in Tesla again.
Yes. Oh,
I
I
don't
love
want
to
to
hear
own
that.
Tesla, but I like to trade Tesla. So my entry was 350.
It's on for the trade right now. She's
Yeah,
doing some good stuff right now.
yeah. And this is the huge supply zone I have. And if we break that, most likely headed to 400. We'll see how the momentum stays. Tesla likes this time of the year. And then we are in TEM. These are all the trades you can see on the right side. I have opened them. Some of them are just longer. TEM reached my target yesterday. My target was 90 and my entry was 75. And then for the people in my Discord, they missed it at 75. I gave them another breakout option to trade quickly here at 83 about the supply zone I had shown on my
That's the
algo.
Nancy Pelosi one, right? She took.
Yes, yes.
Don't bet against the goat, man. Don't.
No, so we've been trading this and owning this for a while. And then I have Bumble. I bought a lot of Bumble at
Oh,
655
Hamid
and
would
then
love that. Our friend Hamid
yeah.
over at Earnings Hub, he's been buying a ton of Bumble in the past,
Oh, he's
gosh,
was
like the
he?
past
Oh, I like
year.
Hamid. I used to do spaces with him for
Oh,
so
he's
many,
awesome.
like I think like a year every week on
He
Tuesday,
loves Bumble. So,
and he loved Rivian and Hood back then. So
yep.
Hood did really well. Rivian is not moving. I have some Rivian too because I like the car, but Rivian is just sitting there. It's been like really frustrating, but we'll see. Maybe still happens. Oscar, we are out. There was our trade here. Entry stop target was 4.5, almost 5 something our trade, but I was taking partials, so total it was 4.6 R for me. I have a little code. These are all my trades here that you guys can see. Like I keep track of
Oh,
everything very
nice. You have it all
detailed.
laid out in the sheet. That's
Yeah, so the
beautiful.
issue for most traders is like, how do I count my R when I'm taking partials?
Mm-hmm.
So what do I have here? Basically, I have exit weight in percentage, and I have the so this is Oscar pretty much right here. So I have an exit here, 33%. I took a third and third and third. So total has to be 100%. That was my stop, and here is my R 4.7, whatever. It has too many decimals, but so that's pretty much how I have it in my spreadsheet. I have it this little code here, right? So
You ever
because
use
that
a like a journaling software, like a Trader View, not
I
Trading View, but Trader
was
View, or
using TradeZilla for a while, but honestly, I got so sucked in there because it was so cute that I just spent way too much time on there, and I don't really need to review my trades at this point after taking thousands and thousands of trades, spending thousands of hours trading. Because when I make a mistake, I know pretty well and immediately why. It's not like I have to analyze really quickly why I did this. I'm like, okay, great, this was a mistake, right? And I remember it. I have like very good memory, so I'm like, okay, this is my pattern. So anyways, I used to, but I think this is so boring, this spreadsheet, that I will just literally like type in the things I need to, and then I leave.
Yeah.
And then
boring is good.
basically, I have here my win rate. It counts for me, and my ROIs.
Solid.
August was not good because I made a huge mistake to oversize on purpose, not from emotions, because I had a lot of good wording on Tuzup, and it again became a scheme of our admin and his family, and I got really hosed on that one. It's a crypto play,
Oh,
so
of
I lost
course.
3 hours, and it's the first trade this year. I lost more than 1 hour. I usually don't allow myself to lose more than that. So that pushed me back. But August was summer and I was traveling, so I still am happy with what I made. So, anyways, guys, I don't want to go too deep into this, but I think every trader must do this. Absolute must. Otherwise, you never money.
I could not agree anymore. Like I've mentored and I've dealt with, and again, as a guy, I've got a back test going back 25 years of everything I ever do, right? So I'm the extreme version of this, but I have never once had a trader come in and say I'm struggling, and me say, okay, well, show me your journal or show me your trades, and they go, I have one. It's always I don't know. It's like, so how do you know what's going right? How do you know what's going wrong? Right? How do you know what you can do in order to say, okay, this is what I'm doing bad and this is what I'm doing poorly? Because at the end of the day, that's all we're looking for is, right, I did this and it didn't work out too well, so then I did this and then it worked out better, and that's it, right?
That's it. And I was up 100% on my 401k, 105% already this year. And then I took this trade and I said, you know what, let me oversize more on this one, because, they said most of professional traders I talk to, these are guys, they're making, like, you are professional. You've been doing this for decades. Maybe you agree with me, but they said, Lia, look, you can have your risk management in place. And I'm extremely detailed with that. This is all I'm going to invest in one stock. This is what I'm going to lose. This is 1% of my account. But they said, with this way, you're going to make a little money right and left. But when you are super convinced, you can size, like you go hard. And sadly, I went hard with the wrong horse. So now I'm up 65% on the year. But that took a big nosedive on my ROI for the year, which I was really upset with.
Well,
anyways,
I actually just got done for my my podcast. I have a podcast on systematic trading, interviewing Mike Bellafiore, who is the owner or the creator of S&B Capital, which is like one of the largest prop firms. This is what they do is, you get there, they create 7-figure traders, right? And they split their money is what this guy does. And he was talking about how for systematic traders, whether it's discretionary traders, whatever it is, the thing that he's noticed from the guys who do okay and make, 6 figures plus a year, to the guys who do great and make 7 to 8 figures a year, is just what you're talking about. Is they know when to, the way he worded it was, swing the bat hard. Right? This is your moment to, this trade, all the stars are aligning, everything is great, everything looks amazing. It's time to take 3 to 4 times the normal risk.
Exactly.
And it'll hurt every now and then, but that's okay.
Yeah. And that's what my friend, I had some mentors that are very famous. There are BBC documentaries about them. They're super famous people in the trading world. They're all in their 70s. I have 3 of those guys that were teaching me, which I consider myself extremely thankful. Maybe my looks have to do with it, but it's okay. So I was extremely thankful that I got these mentors, and they told me the same. They said, you know what? No, like, the way you make the real money is when you really set up, you research, and you go hard, and you go exactly 3-4x. And I tried it first time ever with this company, and of course it was a scam again, and I lost money, which again I didn't lose to the point that would hurt my life or my blew my account, but I was like, "Ugh," and I had a lot of buffer on that account, so I'm like, you know what, I have a lot of buffer here. It's up 105% on the year, so this will be my limit pain, and 10% would be normally, and I went into like 30%, which is a lot still, but anyways. So that was my first time for everything. I will do it again, but I will probably choose a little bit less sketchy name next time.
Yeah.
Well, and what happens is, it's not that, it's not that you swing the bat and when you know something, because we never know anything. It's all just probabilities. But yeah, it's understanding that this, and how we do it as quants, if anyone's interesting, is I have maybe a system that will trade 10 times a week. And then of that, I know which variables make it way better. It's still a less profitable system, but maybe it only trades once a week or twice a week when everything lines up. And in that one, I just apply way more risk to that particular strategy that doesn't trigger very frequently. But when it does, it's got like a 70-80+% win rate. That I'll just really size up and say, okay, right, it's now time to, that's the quant version of kind of swinging the bat hard, is just to say, right, get after it.
Yeah, that's how it works. Yeah, and then just to finish my list for you guys, we are in Len, which is doing pretty well. But it's every time you're trading this kind of names that were beat up, there is a lot of supply to digest. There are a lot of back holders, so it takes longer the reversal. From my experience, than when you trade breakouts. Like breakouts, you get in and boom, you get stopped out or you just fly when there is no supply about. So this one takes a longer time, but I'm betting on the lower interest rates. And it's nice cup and handle. I've been in this name for a couple of weeks now. And then I have one more like that is Elf, which we entered at 116 right here. And it's again having a little break here. At this point, I trailed to 125. If it just decides to go back down, I'm going to be out because time is money also. So that's it. A new PS is just for Christmas. We'll see if this one takes off. I looked at the chart past 6-7 years. It usually likes to run into Christmas. So we will see what happens.
Makes sense. We see some of those holiday names, that come
Yeah,
around.
Amazon, I think, is another one that likes to run into Christmas. And then we have SoFi Breakout, which is still valid. Actually, someone could trade it, but the volume is a little bit low today. This was my level here. It's just again in a little bit of chop. I don't know. I'm moving today. That was my entry, was ideally here, but you see how many days it was trying to make it. And then what else I'm looking at? I give my members AUI, the breakout here, and now it's just now doing little flaggy there and could probably go higher. I didn't take AOE because I can be in so many trades. Unless I have algo like you, Michael. I could be. Oh, wow. Crypto flying today. Okay.
Yes. I was actually just over there looking at that. That looks too good to be true.
But I want to discuss one thing with you because we looked at this. We looked at this short on IWM, and I looked it up yesterday. There is still short, but it's less than when we were looking 2-3 weeks ago. So they are closing. And also IWM is in all-time high almost, right? Or is it today already in all-time high? Let me check the chart.
Close, but I don't think.
Not yet.
Not yet. Like, very, very close.
It's very, very close. Yeah. So that's the all-time high, 243 I have on IWM. So yeah, I think a breakout of the all-time high could be powerful there.
Yeah, they've covered a bit of their shorts, but
still a lot, right?
Still a lot to go. So that really makes me think that we could see this explosion. And generally these end up with it's under futures there. There you go. Yeah, generally that's.
I learned this one here. This is great for me too. I'm learning.
And that's usually how it goes. Is you read something in the paper that XYZ company blew up, and then okay, now
we know who.
Now it's time.
Was that?
Yeah, now it's time to swing for the fences.
You guys see it, right here. This is when we spoke about it in August, before I went to Burning Man. That was like a real short. And now it seems like it's a little bit less. And they also seems like, this red one, like large traders.
Yep, that's right.
Small traders are slightly long, not too much. So so I think once we get to the all-time high, and I am in already, but when we get to break out of the all-time high, I think that could be powerful. Then that's when they probably have their stops somewhere above. I would be thinking that they would be smart to do it, but how can you be short on this? I don't know.
And it seems like it was a way to get access or leverage to
longs, to buy longs.
To buy longs. And because if you go into the NASDAQ chart there, the NASDAQ chart, they were very long and then ended up reversing that position. So it looks like the trade, as far as you can tell, you never know for sure, but as far as I could tell, was let us short the IWM to use for cash to buy the NASDAQ. And look at on the red line, that sharp move down, that happened very, very quickly. And so that makes me think that was a blow up, because there was days that we were coming in and we were seeing this, this trade of IWM would be up a bunch and then NASDAQ would be down. And that's super rare for,
that was,
it's like not normally how you see that go. So yeah, I don't know how much of that trade is done, but they're still short, and they're still short the S&P 500. And they haven't covered the S&P 500 yet.
Is there, huh?
It's like 70,000 contracts. That's a big deal.
I mean, they'll catch the top at some point, right? I mean,
well, and often what you can do is just, when they're wrong, like when it ends up unwinding, you go, okay, right?
Now it's time.
Good to go.
They're short SPY a lot.
They're hating it.
And look at where they started to short, right? They started to short on the way up. They've been averaging into that short. And all of this, I think, with these shorts were to raise money to buy the NASDAQ.
Yeah, that's when they flipped short, was April. I'm like, no, this no.
Large
Couldn't believe
traders, it. I can't believe it. But yeah, on my interactive brokers, when I went short Intro last week, and suddenly I'm like, oh, I have $200,000 more to trade with. I said, where it come from? I'm like, from the short. And that's how they do it. Most of brokers, you can't do it that way. It wouldn't like automatically add to your position, like to your cash position. But IB does it.
Yeah,
it's interesting. Yeah,
and a lot of
scary. It's scary.
It's also it's account sizing too. So just one of those things where you just note that, I think you have to have a larger account than maybe some people in the audience would in order to be able to do that. So
yeah, it's a professional platform. I think IB is the most sophisticated trading platform out there. It truly took me years to learn it, and the mistakes I made there was unbelievable.
Yes, I love them. For new traders, I don't think it's really their support is bad. Their support's really bad. But
horrible.
When it comes to, I could not do the quantitative trading I'm doing through there or through anywhere else except maybe like an Alpaca or something. So if you're interested in like really, really professional trading, then you need to go with IB, I think.
And I trade on Singapore exchange, Hong Kong exchange. I trade all sorts of places, which you can't really do in other accounts. And now I'm coding algo too. So I've been debugging with my team for 2 weeks. I was up till 1 a.m. yesterday. So that's it, my friends. I don't have any more. I loaded up yesterday on ETH, Grayscale, and EBIT and Bitcoin. I loaded up because I was sitting here and as I said to everyone, I had a lot of cash because of the Figma IPO that we got very fortunate to get allocated a lot of shares at $30 and sold them for like 100. And now, as I said, remember when we discussed, I said it's going to go back down to 40, 50, or maybe even lower. And exactly that. It's just with IPOs, it's very unfortunate. This is what is happening. IPOs are no longer for retail traders. IPOs are for early investors. Otherwise, you can't really make money with it. That's unless you want to short everything that is on IPO. Look at Klarna. The same story.
We should all three just start our own little hedge fund that shorts all the IPOs together.
It's really bad. But I have a lot of members. As our Discord is very sophisticated, and a lot of the guys there are working in finance, and they do buy pre-IPO shares, which is a great way to make money because you buy them if you get lucky. I was trying to get Underil, but the valuation there is at this point higher than LMT, and I'm just like, seriously. It's like a much smaller market cap. Anyway, so that was the Figma. So I had the cash, and I'm like, what the heck? There's no dip coming. We get no dip in this market. I'm like,
she's just relentless.
Dip? Look at this. It's just never the dip. Like you get dip for a little ant.
And I don't think we will until those shorts cover. That's been kind of
I
my
don't
whole
think so either.
right.
Yeah.
Like you got to
It's
think
gonna continue.
every dip that they see, it has to just be they have to cover.
Allocated.
They have
Yeah.
to like, okay, finally, right? We have some liquidity in which we can buy into.
Yeah.
So we have to
Oh
do
no, I missed Ionoq.
it. Ooh,
Oh,
wow.
Ah,
TSLT. Tesla's going, no, Leah. Let's
oh,
go.
no, I
Mhm.
missed my trade. Why I don't put automatic stuff?
Okay, this is why you need your strategy coded right here. This is why we need those
I was
algos
looking
running.
at the chart all the time with my guys have to be freaking out because they're all in that trade. They must be like freaking out in the Discord happy. There's every day we have like a high flyer. It's ridiculous.
There's always
Tesla,
one.
380.
I know. I'm holding TSLT right now.
Wow, come on, my portfolio, come on, all-time highs.
Leah, I bought
my
a
God.
bunch of TSLT 2 weeks ago, and I've just been chilling with it. So
These are
TSL?
TSLT. It's the 2x leverage Tesla.
Oh my God, lucky you. You
Yeah, this is-
wow.
this is one of those times I try very hard to remind myself it's that it's a bull market, that it's not me. It's like you almost there's times that you have to like
Yeah.
you have to bring up your self-talk to make you feel good, but these are the times where I'm like, you're not a genius, just everything's going up and I'm trying to like
Yeah.
So
pull
true.
myself.
So true.
Because I just brought up my swing count
Everything.
too, and it's big today, and
It's
I just have
Mundo.
to.
It's a Mundo day.
I'm like
Now I'm just more, oh my God, RGTY. Oh, look at the chart.
wow,
Can you see it?
yeah.
Oh my Lord, what's happening? Wood, coin. Wow, and JP Morgan has a a nice breakout here too. If you guys are interested, I made 120% on this when I sold it like a week ago, 2 weeks ago. I'm done with it for now. It's gonna go higher, but I'm looking for like the 100%, plus trades.
Get a
I
couple
get
of
very
those. You're
spoiled in this bull market.
well. That's what, and this will always. As an old man, right? The cycle will repeat where everybody you'll see people that you've never heard of before bragging about how they made 500-600%, and then all of a sudden the next bear market will inevitably come, whether it's next year
Yeah, and they
or a
lose
couple of
it
years
all.
from now, and they lose it all. And that's what I always try to remind people is now is the time to make money. If you're not making money right now, you should probably just switch to index funds and move on. But then understand there's two parts of it. You should be printing money right now. Like I've got, I think 2 or 3 accounts that are up 100% plus this year. And then, but I don't look at it like the market's ripping, right? The real question is when the music stops, how much of that do you keep? It won't be all of it, but how much?
This is what we all would like to know. And as I said, like I deployed some cash this week after CPI PPI into the crypto because I wasn't like in Tesla. I was like, what am I gonna trade? Everything is so high up. And now I'm just like having these exact thoughts when the music stops. I do not think this year. I really don't. 2026 we have midterm. It might stop for a bit in March. I do not know if this admin would allow bear market, quite frankly.
Well,
I don't know. Of course, it's not like in his magic stick, but he has a lot of power about the market, as we could see this year. What do you think? What are your thoughts? I'm inclining more towards like 28, 29. Ugly thing.
I've got a chart here. Let me grab this. I am not a huge seasonality guy, I'll just say, right? I buy my Stock Traders Almanac. I love Jeff Hirsch, shout out. But one part of seasonality that makes sense to me, and I just thought of this because you were mentioning it there, Leah, is this election seasonality. So what this chart is, the black line is the average S&P 500 return based off of whether it's a election year, a post-election year, a midterm year, or a pre-election year. So that's right, because you've got this 4-year cycle that happens down there in the States. And the red line is kind of what has happened so far. And you can see quite often you get this kind of just sideways consolidation going into midterms. And this kind of seasonality makes sense to me is because as people get unsure with what's going to happen with an election, you get a little bit more chop because you don't know which side is going to win and what their policies are going to be, whatever. And then after that occurs, you
No.
generally have a rip into, and then this is right before that next election where things go sideways again. So if I had to bet, I just thought of this when you brought up the midterms. This is kind of the bet that I would make, is that we're probably got more into it. And then if there is going to be any problems, it's just going to be leading up to that midterm and then when the midterm. So that's like what, next, probably mid 2026
November.
is maybe when things kind of start to chill out. And then when that election's over, you can kind of go and rip off.
So we
right?
probably have to be careful again from March till like for that 6 months period. Some
Yeah.
chop. Yeah. You can trade it, but yeah. All right. That looks fun. Yeah, and you see there is spike into the early year. Yeah, usually we kind of go up till March, and then the tax season is kind of yucky. So we'll see. Okay, cool.
Yeah,
But
that one I
bear
like because it
market.
just makes sense to me. It's like, okay, this is not just September is usually a down month, so I should short September. This is a phenomenon that's going to change the way the market reacts, because depending on what party is in power, that's going to change a lot. So
And is this based on a party or this is just in general?
this is just in general. So the black line is the last 100 years of average stock market returns based off of what normally happens here as well. So
yeah, the macro guys in my Discord also saying that 26 will be yucky. They are inclining towards that, so we'll see. Okay. I was a negative Nelly first in August. I said, "Oh, September," and and we got a dip that's like micro dip.
Oh my gosh, TSLT, the 2X is up 10%
Oh my God,
already.
you must be flying. Why I never buy those? I always buy those like Tesla.
No, I mean it's scary, but I think for me a lot of the time I end up playing something like TSLT over options, just because especially recently I'm not as focused on options, and if I'm going to buy them, I'm probably going to do too short dated generally. So I've just been playing with the TSLT just so I don't have to deal with, the options and the theta and everything.
Whoa.
But
this is a nice Friday. Hopefully it stays like that.
I know. And then I'm going to try and find a couple
Jenkins,
trades too. We'll see. We'll see.
But you do you trade you trade mostly futures, or you trade
Yeah.
It seems like you started trading more individual stocks, no?
I pretty much just do the futures, and then if there's opportunities like on Tesla where I really like it, I'll do some, I'll do some TSLT or something like that. But haven't been on the individuals too much. But if there's an opportunity I really like, I'll dip into it for sure.
Yeah.
But
mainly
on
the
the
Tesla
futures.
Tesla chart looked amazing. I just had to hop on. I'm like, this is a compression. It's gonna be. Really
That's the thing. It's just consolidation, right? We're expecting that next leg up, so things looking good. Look at that. Boom. Love that.
Am I sharing the chart still?
Yeah, I got you.
Yeah.
I see.
You got mine.
It's fine,
here.
Michael. Don't worry about it. Yours is
pop back.
Oh, you're good.
I don't.
I'm just either way. I think we're good to get wrapping up. But I mean, this is a beautiful morning. Obviously, we'll see if Tesla wants to continue and some of these other names mentioned. But always a pleasure, guys. Thanks for hopping on.
Yeah, always have fun.
Nice to see you guys.
Nice to see you. Everybody enjoy the weekend. Enjoy the rest of the day. Play safe. What's up?
Next week I'll be in Japan, so I will.
Oh, lucky you.
Yeah, I'm going.
Grab some sushi. Yeah, that's been. I've been lots of places. I have not done sushi in Japan yet, and that's definitely on the bucket list.
Japan. It's
one of these
amazing
days.
Place. So I will definitely grab sushi for sure.
Yeah, we want to see photos. I want to see photos for sure.
I will send you some.
Okay, sounds good. Talk soon, guys. Everybody in the chat, make sure you guys are liking and subscribing on the channel.